Welcome to another episode of Accounting Recounted, the podcast that dives deep into the world of accounting and finance. I'm your host, Amanda Hendren, and today we have an important topic to discuss. We'll be exploring the consequences of making serious errors on your tax return. So, if you've ever wondered what happens if you ever veer off the right path during tax season, this episode is for you. But before we get started, I'd like to remind our listeners that the information shared in this podcast is for educational purposes only. If you need specific guidance regarding your tax situation, it's always best to consult a qualified tax professional. Now, let's jump right in. Have you ever come across individuals claiming that they don't have to pay taxes because it's quote unquote unconstitutional? Or maybe you've heard someone say that paying income tax is voluntary. Well, I hate to burst their bubble, but these arguments won't hold up when it comes to the tax authorities. In fact, such claims are considered frivolous by the IRS and can lead to serious consequences. The IRS defines frivolous claims as any unreasonable entry on your tax return or failure to file a return altogether. These claims have little to no chance of succeeding, and attempting to use them may result in adverse outcomes. The IRS has been cracking down on frivolous claims, even listing them as one of the dirty dozen tax scams to look out for in 2023. Promoters who encourage individuals to make such claims can also find themselves in hot water with the IRS. So, what are the potential consequences of using frivolous arguments on your tax return? Let's dive right into that. First and foremost, you're putting yourself at risk for civil or even criminal penalties. Filing a frivolous return can result in a civil penalty of $5,000, but that's not all. You may also face other related penalties, such as failure to file, failure to pay, accuracy-related penalties, civil fraud penalties, and even fraudulent failure to file penalties. The failure to file penalties can accumulate to a rate of 5% of your unpaid taxes per month, while failure to pay penalties can accrue at a rate of 0.5% of unpaid taxes per month. Accuracy-related penalties can reach a total of 20% of underpaid tax, and civil fraud penalties can amount to a staggering 75% of unpaid taxes. These penalties, as you can see, can escalate very quickly, leading to financial strain and potential legal repercussions. It's clear that traveling down the road of frivolous claims is not the path you want to take. While the consequences we've discussed so far primarily focus on civil penalties, it's essential to note that serious tax offenses can also result in criminal prosecution. Engaging in deliberate tax evasion or using fraudulent schemes can lead to criminal charges, fines, and even imprisonment. It's crucial to understand that the tax system is designed to ensure fairness and uphold the law. Now, let's shift our focus for just a moment and let's talk about errors that may not be immediately evident on your return, but are maybe discovered later. For example, maybe you failed to report wages or interest or dividend income that should have been considered. Allocating certain business expenses like meals and entertainment to the wrong category is a common mistake for business owners. The IRS has various methods of detecting such omissions, such as matching payment records from employers, banks, and brokerages. When these inconsistencies are discovered, the IRS will notify you about the proposed additional tax along with any applicable interest and penalties. While unintentional errors may not carry the same severity as frivolous claims, it's still essential to rectify them promptly. Correcting these errors and addressing any outstanding tax obligations is crucial for maintaining compliance with tax laws and avoiding unnecessary penalties. So, with that being said, what steps can you take to ensure that you don't find yourself in one of these predicaments? It all boils down to understanding and fulfilling your tax obligations, and here are a few key points you can keep in mind. Number one, educate yourself about the tax laws and regulations that apply to your situation. Consulting with a knowledgeable tax professional can provide valuable guidance and help you navigate the complexities of our tax system. Number two, Keep meticulous records of your income, expenses, and deductions. Accountable Numbers can help you with that. So if you are having trouble with this, please let us know. Maintaining accurate and well-organized documentation will not only make tax preparation smoother for you, but it's also going to serve as evidence in case of an audit. It's going to make that audit process a lot easier for you. Third, file your tax returns on time. This might seem like a simple one, but believe me, if you don't have it written down somewhere, it's so easy to forget. Remember, the failure to file penalty can accumulate rapidly, so it's crucial to meet the deadlines set by the IRS. Having accurate books closed each month can make those deadlines much easier to meet. If you anticipate difficulties in meeting these deadlines, consider requesting an extension or seeking professional assistance. And finally, if you do discover errors on your tax returns, or become aware of any discrepancies in your books, address them promptly. Consult with a company like us at Accountable Numbers, and we will help you understand the best course of action that you should take to rectify the situation. Whatever you do, don't put it off. Like I said, let's deal with these things promptly. It will save you so much time and money in the long run if you address them when you find out about them. By being proactive, informed, and compliant, you can significantly reduce the risk of making serious errors on your tax returns and the associated consequences. And that brings us to the end of today's episode of Accounting Recounted. I hope that you've gained valuable insights into the potential ramifications of making serious errors on your tax return. Remember, the tax system plays a vital role in funding public services and maintaining overall functionality of our society. Complying with these laws is not only a legal obligation, but it's also a civic responsibility. If you have any questions or topics that you'd like me to cover in future episodes, please feel free to reach out to me through our website or through our social media channels. And don't forget to subscribe to our podcast wherever you get your podcasts so that you don't miss an episode. Thank you for joining me today. Until next time, stay financially informed and make wise decisions.